So with that, let's go to the floor show. We have Jonathan Corpina at the New York Stock Exchange and at the CME, Larry Shover and Scott Shellady. Scott, let me begin with you. So, Monday, it kind of seemed like it was buy the dip. We finally had a buying opportunity. Now, is this a major, major case of buyer's remorse, or are we not there yet?
Yeah, you know what? Monday was buy the economy. Tuesday was sell the deal with China. Look, we've had a situation now for probably the last 6 months where in the agricultural world, the commodities have been trading like they're worried about a deal with China. Not going well. A lot of commodities are on their, yearly lows. But then we've had the stock market setting all-time new record highs and just trading the U.S. economy and not worried about China. So finally now the U.S. equity market has woken up to the fact that this might not get done as quickly as they'd like, and they might not get as much as they'd like, but I'm still not too concerned about it. I just think that ultimately it will take some time to get through the market. Look, we still have a great economy. Look at everybody else around the world. Look at the growth we've got here versus the growth they've got in Europe and or Asia. They're still trying to buy themselves out of problems in Asia. Europe's contracting, and they've got social and cultural problems. We're still doing very well, and we got to still, bank on that. But we still have to get through this deal with China, and it's been hanging over our heads too long. And I think finally the equity market woke up to it a little bit. Yeah. But I think in the end, stocks are allowed to go down. It'll all be okay.
How far down do they go, though, Jonathan? Do you see a correction, and if so, how bad does it get?
I don't see a correction. And Lauren, let's kind of keep this all in perspective, right? Since the beginning of the year, the market's up, what, 16, 15%? So a 2% pullback is okay. The markets, like Scott said, are going to go up and they're going to go down, and our economy's doing well. We are no different. We are in a no different position now in the China deal than where we were 4 months ago. I think investors are getting antsy, and when the president tries to negotiate this deal through social media, I think it has a bad taste in China's mouth. So what is their immediate reaction? Their immediate reaction is they're going to flex right back. So I don't think anything happens soon. We're going to have a little bit of tension back and forth. Friday should be very interesting to see if they show, who shows, and what's said. But moving forward from there, I think in time, once this progresses and we get some sort of definite, resolution in place, the markets will shake this whole thing off.
I hope so, and I like and appreciate the optimism. Larry, would you agree, or are you going to take the other side here?
I agree on the long term, but short term, you have to ask yourself the question, what's the upside if there is an agreement in place by May 10th versus the downside if there's not? I mean, to me, the indicator is looking at the 10-year yield. It's only trading 4 basis points above effective fund rates. In my mind, I think that's pointing to a protracted, complicated, ongoing negotiation. So short term, I'd be a little bit concerned because I feel like the downside right now is much larger than the upside. I think if there's a deal done, we can definitely get back to 29.50. But until we have an insurance cut from the Fed, until there's a clear pathway with this trade negotiation, I can't see our multiple getting much higher than that, which means it's hard for me to see the S&P higher than 29.50. I can see it much lower in the short term.
Well,
Larry, you're going to have to watch your Twitter feed on Friday to see.
I don't watch it. I don't watch
the outcome
I don't
of
watch
these
it.
meetings.
I don't follow them. I don't listen to I don't watch it. I don't watch it.
And that's
just trade.
And that's the thing. You can also make the case, and you can make it for this China trade negotiation, and you can make it for the Fed, that there's such a thing as over-communicating, and it's causing the red that you're seeing today. All right, we got to leave it there. Jonathan, Larry, and Scott, we appreciate you. Thanks, guys.